Hi guys, how are you? Welcome back. Real Macroeconomics and Investing, patreon.com/Real Macro. Hello to YouTube, TradingView, Twitter, everybody. My subscribers on Patreon. How you guys doing? Come on down, like, follow, subscribe, all that good stuff. And if you follow, you get some goodies. All right. Number one thing is I need to make this video for you guys because I haven't been doing a lot of videos on YouTube. I've been focused mostly on here and Discord and TradingView. But I do have to make this video in case you're not following along. All right. Number one, let's get started. Number one, we are way overbought. The problem with being overbought is that we're much lower to be overbought. So while you might be thinking in your head that, well, everything is great, market's going up, yeah, that's not how you analyze markets, right? We don't go off your vague hunches and feelings. So that's number one. So you got to get out of the market. Well, the market over the course of time goes up, and if you have a good strategy and well diversified, right? Okay, that's nice to go tell your friends in a bar or whatever, in some party. Reality is you got to mitigate risk. Okay, we got a lot of risk. So if you haven't done so, step aside. Cash is king. You don't believe me? Listen to Buffett, right? Oil is not going down because we have too much supply. No, the problem is we don't have enough demand, and the markets right now are forecasting that. Now imagine that oil has come all the way down to $57 and probably going to go a lot lower. Why? Because we're not all working, we're not at max employment. What's exactly the reason? Well, the reason is nobody cares what's going on right now or in the past. We care about what's going to happen in the future. And right now, the market is telling you that there's going to be a slowdown. So you need to kind of step aside. Right? Listen to the message of the market. Don't listen to vague hunches and feelings. Right? Now, I did call that Ilona was going to be removed as CEO back in September 2023. What are they doing today? Yes, he is going to be removed. About time. All right, so exports, net exports from the United States to the rest of the world collapsed today. Tariffs cut both ways. So don't look at it just, well, China's not going to be selling stuff to us. Well, we're not going to be selling stuff to the rest of the world either. NASDAQ had a nice, this is a very small time frame, had a nice little F flag. Okay, nice move to the upside, 1, 2, 3 up. F flag cracks, great, ready to go. Should go much lower. And what happened? Oh, news comes out. The standard manipulation, of course, and it goes right back up. So from failed moves comes fast moves in the opposite direction. Pops. It's not going to go much further, but it is worth noting. Okay. Yeah, we'll skip this one. How much is $1 billion? This is when I was talking about the short. All right. So let's move on to bigger and better things. All right. What do you see here? Just look at this chart, right? You don't have to be a technical analyst. You don't have to be some guru. Just what do you see there? A big erection, right? Market is going vertical. Vertical. Big hockey stick. And we go all the way back to what? 1986. Look at that. This is the NASDAQ, right? Straight up. What do you think is going to happen next? Straight down. That's what's going to happen next, all right? So you need to minimize your risk, your exposure to the markets before you get hurt. And even though it's up the way it is right now, there's a lot of stocks that are down 30, 40, 50%. So this is not exactly reflective of necessarily your portfolio. So that's the first thing I'm going to tell you right off the bat. It's going vertical. The next thing I'm going to tell you is, look, it's a nice little 1, 2, 3 move to the upside. 1, 2, 3 up. And you know what happens with 1, 2, 3 ups? They resolve themselves to the downside eventually. Okay, they're all correct. All of them. Doesn't matter what it is. Small time frame, big time frame. They're all going to correct to the downside if they're going up. If they're doing the opposite, then they correct the opposite. Right? Good. Now, let's get a little bit more technical about these things. Put in a nice little log. What do you see here? Weaker highs. Okay, weaker highs. So you have this high, and then you have this high, and if you connect the two dots, because you got a nice little hook here, right? You see that hook. Once you start to connect it, the market is weakening. When it starts to weaken, it starts going into that wedgie formation. Ultimately, what's going to happen is it will correct. This structure will correct. They always do correct. Okay. So if you take a look at this one here, okay, you had a nice vertical move to the upside, and what happened? Correction. Good. Could you imagine getting this kind of move here? Right. So we haven't even begun to sell. And that's very important for you to understand. We haven't even started. This is a gift for the market bouncing as it has lately. Okay? Good. So remember this. If they don't scare you, because if you think there's going to be like COVID, some 34-day event, and then, oh, we're going to start going back up and blah, blah, blah. You know, if they don't scare you out, they're going to wear you. Okay? It literally took, and this is not even inflation adjusted, right? It literally took 17 years for the NASDAQ to break even. 18, but conservatively, 17 years. You got 17 years to be waiting to visit these new all-time highs? I don't think so. What would it be? 17 years from now is going to be 2042. Well, no, that's not the way markets work. No. Past results are not indicative of future. Past performance is not indicative of future results. So I'm telling you, protect yourself. NASDAQ, same thing. Okay? This is going to correct itself eventually. So I can only do so much for you. I don't come out and make these kind of videos on YouTube frequently. Just be really, 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 really careful. It doesn't look good. Okay? I'll just leave it at that. And if you think that we're off, the new all-time highs and everything is great, don't worry about it, everything is good. I want to remind you, 3 years ago, look what happened, right? You had these bear market rallies, and they all resulted to lower lows. Okay? We haven't even begun to start to sell. Just getting started. And this is probably as high as you're going to get it. It can go a little higher. That's fine. But you're going to try to what? Squeeze out another 2, 3, 4, 5%? For what? Right? And then risk all of this? Going to risk all of that? That makes sense. So be cautious out there. Right? I'll talk to you guys soon. Come down, follow, like, subscribe. Patreon.com/Arrio Macro. Follow me on TradingView as well. It's going to be helpful for you. You can see how I do things. Definitely different than most people. Remember, I'm a macro trader. I'm not going to say something today and it's going to happen tomorrow, next week, or next month. Right? These are long-term charts. Thank you very much. I'll talk to you guys soon. Take care. Ciao, ciao.